I want to teach you advanced EMA settings on TradingView. You're going to learn a very accurate buy-sell signal trading strategy, so make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, we need to add 4 exponential moving averages to our chart, but this is not just a simple setup, and 2 of them are from an advanced indicator with complex algorithm. Alright, let's add the moving averages. Here we click on indicators and we search ribbon, this one, moving average ribbon, and now we need to change the settings of the ribbon. So here we go to the settings of the indicator and we remove 2 of the moving averages, because here we're gonna add only 2 moving averages and 2 of them should be exponential moving averages. So here we set EMA for them. And then for the first EMA, we set the length at 5. And for the second EMA, we set the length at 8. For the first EMA, we set the color to orange. And for the second EMA, we set the color to white. And finally, we go to the Style tab and we increase the thickness of the lines so they will be better visible on our price chart. Alright, we're done with the settings of these 2 exponential moving averages, and now we need to have another 2 exponential moving averages. So here again we click on indicators and we search machine learning and optimization moving average, this one, which is written by Zierman. When you click on this indicator, nothing will be added to the chart and you need to activate it in the settings. So here we go to the settings of the indicator and here in the inputs tab, and here for the amount of historical data, we choose all data. So all the available data will be used in the calculations of this indicator. And then here for the optimization goal, we can choose performance, win rate, or combined. We choose combined, so the indicator will be optimized for both of performance and win rate. And then here we activate machine learning, so the indicator will use a machine learning algorithm in the calculations. And then for this moving average, we set it at EMA, and also for this moving average, we set it to EMA. Alright, we're done with the settings of this indicator, and now let me teach you how you can trade and find buy-sell signals based on these moving averages. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our trading strategy. So here, this orange line is an EMA with length of 5. This white line is an EMA with length of 8. This blue line is an EMA with length of 50, but this green line here doesn't have a fixed value for the length. The length of this green EMA is variable. As I mentioned earlier, this indicator uses a machine learning algorithm to find the best length for this moving average line. At the moment, by analyzing the data and considering both of the performance and win rate to be optimized, the length of this EMA line is 107. But later, this can change. By the help of the machine learning algorithm, this indicator can adapt to the current condition of the market, and by analyzing the data at any given time, it sets the best length for this moving average line, and it is optimized based on performance and win rate. Alright, now let me teach you how you can find trading opportunities based on these exponential moving averages that we have here on this chart. First, I explain a long position setup, and then I will explain a short position setup. For a long position setup, we wait for a situation like this, where the price crosses above the blue EMA, which has shorter length, and then it crosses above the green EMA. When the price is already above these 2 moving average lines, after that, we focus on the orange EMA and white EMA. We want both of them to go above the green EMA. For example, here, when this candle is closed, you can see that both of the orange line and white line are already above the green EMA. Now we should wait for a pullback, and for identifying a pullback, we can use the orange line and white line, or we can use price action or both of them together. We wait for the orange line to go below the white line. When this happens, the price is declining. And when we check the price action, we can see that the price is down from the previous high. In this case, the price didn't reach these two moving average lines. But in other cases, the price may reach to these moving averages. There could be another form of pullback where the orange line doesn't go below the white line, but the price touches these moving average lines. I will explain that case in another example. So here you can see that the orange line went below the white line, and this tells us that probably a pullback is forming on the chart. In the next step, we should wait for a signal that shows end of the pullback, because here we have the orange line below the white line. Again, we can use them for identifying end of the pullback. We wait for the orange line to go above the white line. When this happens and the orange line is already closed above the white line, it tells us that probably the pullback ended and the price is gonna advance more. So here the buy signal is confirmed, and in practice we could enter a long position at this point when this new candle was opened. The stop loss for this trade is placed below the pullback or below these EMA lines if they are not very far from our trade entry. This is a safer level for our stop loss and profit target at risk to reward ratio of 2. Please pay attention that for decreasing the risk as much as possible, we don't take the next pullbacks while the price is above the blue line and the green line. I recommend you to focus only on a setup like this, where the price goes above the blue line and the green line, and you enter a trade only on the first pullback. This will help you to enter in a higher probability trade. Alright, this was a long position setup, and now let me teach you a short position setup. For a short position setup, we wait for a situation like this where the price from above the blue line and the green line crosses them and goes below them. In the next step, the orange line and the white line should also go below the green line. For example, here, when this candle is closed, you can see that the orange line and the white line are already below the green line. In the next step, we should wait for a pullback. But there is an important point that you must pay attention. When we are waiting for a pullback, the orange line and the white line shouldn't go above the green line or the price above the green and blue line. When the price is above the green line and the blue line, it's a long position setup. And then here, while the price is above the blue line and the green line, you can see that the orange line and white line also went above the green line, as you can see. But after that, we didn't get the next conditions regarding the pullback, and you can see that the price went down and now it is below the green line and the blue line, suggesting that we should look for short position opportunities. After that, you can see that the orange line and the white line are also below the green line, and now in the next step, we should wait for a pullback. For a short position setup, we want the orange line to go above the white line, or another condition, the pullback of the price to green and blue line, but not above them. Here, in this case, you can see that we have both of them together. Here, the orange line went above the white line, and the price is on the touching point of these blue and green EMAs. In the next step, we should wait for a signal that shows end of the pullback. We wait for the orange line to go below the white line. When this happened and the orange line is already closed below the white line, the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the green EMA, above the pullback, and profit target at risk to reward ratio of 2. Similarly here, I don't recommend taking the next pullbacks while the price is below the blue line and the green line, and it is better to focus only on the first pullback after the price crossed below the blue and green exponential moving average lines. As I mentioned earlier, we can have a situation that for identifying a pullback, we don't have a signal from the orange line and the white line, but only from the price action. For example, here you can see that the price went below the blue line and then below the green line, and after that the white line and the orange line are also below the green line, as you can see. And here we got a pullback of the price to the green line, but here the orange line didn't go above the white line because this was just a small pullback. In this case, we can use a price action concept. In a downtrend, when the price goes for a pullback, before that, here a swing low is created. In the case of a pullback in an uptrend, a swing high is created. This swing low here is a potential support level, and we wait to see if the price can break this level or not. You can see that this candle is closed below this level, so the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above these green and blue EMA and profit target at risk to reward ratio of 2. Please pay attention that although this trading strategy is very accurate and by the help of advanced calculations we have an adaptive EMA here that works very well, but this doesn't mean you will not have false signals. No, this is not possible, and there is no trading strategy with guaranteed signals. Even with the most perfect setup, the market situation can suddenly change and you end up in loss. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.